China's frail Q2 GDP growth raises urgency for more policy support. A worker checks steel wires at a warehouse in Dalian. Summary: GDP grows 0.8% quarter-over-quarter in Q2 versus 2.2% in Q1, shows slowing momentum. GDP expands 6.3% year-over-year in Q2 due to low base effects. Frail data raises urgency to unveil more policy steps. Policymakers seen avoiding aggressive stimulus due to debt risks. Beijing, July 17, Reuters. China's economy grew at a frail pace in the second quarter as demand weakened at home and abroad, with the post-COVID momentum faltering rapidly and raising pressure on policymakers to deliver more stimulus to shore up activity. Chinese authorities face a daunting task in trying to keep the economic recovery on track and putting a lid on unemployment, as any aggressive stimulus could fuel debt risks and structural distortions. Gross domestic product grew just 0.8% in April-June from the previous quarter, on a seasonally adjusted basis, data released by the National Bureau of Statistics showed on Monday, versus analysts' expectations in a Reuters poll for a 0.5% increase and compared with a 2.2% expansion in the first quarter. On a year-on-year basis, GDP expanded 6.3% in the second quarter, accelerating from 4.5% in the first 3 months of the year, but the rate was well below the forecast for growth of 7.3%. Reuters graphics. The annual pace was the quickest since the second quarter of 2021, although it was heavily skewed by economic pains caused by stringent COVID-19 lockdowns in Shanghai and other major cities last year. The data suggests that China's post-COVID boom is clearly over, said Carol Kong, economist at Commonwealth Bank of Australia in Sydney. The higher frequency indicators are up from May's numbers, but still paint a picture of a bleak and faltering recovery, and at the same time youth unemployment is hitting record highs. The latest data raises the risk of China missing its modest 5% growth target for 2023, some economists say. More timely June data, which was released alongside the GDP numbers, showed China's retail sales grew 3.1%, slowing sharply from a 12.7% jump in May. Analysts had expected growth of 3.2%. Industrial output growth unexpectedly quickened to 4.4% last month from 3.5% seen in May, but demand remains lukewarm. Private fixed asset investment shrank 0.2% in the first 6 months, a sharp contrast to the 8.1% growth in investment by state entities, suggesting weak private business confidence.